Well, millions of people bet they could predict who would win the NCAA's annual college basketball tournament, known as March Madness. One insurer bet against them all.
Berkshire Hathaway was the insurer who wrote the policy on a $1 billion prize that was being offered by Quicken Loans to whomever could fill out a perfect bracket, accurately and perfectly forecast how the tournament would look.
The odds of predicting how the 64 teams in the big dance wind up? About 1 in 100 quintillion. That's a 1 with 18 zeros after it. You're about as likely to hit the Powerball 3 consecutive times. Best Week's Mike Buck spoke with Berkshire Hathaway's Warren Buffett about the policy.
He said, it's somewhat like writing catastrophe insurance. Most of the policy works, but it only takes one to wipe out the profits on the others.
Prize indemnity insurance is indemnity insurance for promotions that are set up such that if an event has some sort of a contest and they want to be able to offer some sort of a big prize, like a $25,000 cash prize or a car or a boat or pretty much anything that's of substantial value, there's a policy that they can purchase coverage from a company like ourselves such that if somebody actually wins the contest, the promoter doesn't have to pay for the prize. They, in essence, are reimbursed from us for the cost of that prize.
Broker Greg Esterhai co-owns 2 Ardmore, PA companies specializing in prize indemnity insurance, U.S. Hole-in-One and Interactive Promotions Group.
One of the most common things that people think of when they think of prize indemnity insurance is hole-in-one insurance. That's probably the most popular product that people think of. But we also get involved in all sorts of other contests and games outside of golf. We do field goal kicks at football games, half-court shots, dice roll promotions. We'll see a lot of direct mail contests.
Do you ever have to deny a claim?
Yes, unfortunately, if for instance, hole-in-one contest, if a client has purchased coverage and they said it's going to be on the 15th hole at 190 yards, and the pro at the golf course grabs the signs, and even though the sign says 15th hole, 190 yards, he goes and puts it on the 3rd hole at 140 yards. They get a winner, they call us, say, oh, we had a winner, and then we do some verification, and all of a sudden we realize, hey, you guys didn't do this on the right hole, and it's a lot different when you're doing it from 190 yards than it is 130 yards. So unfortunately, just like any insurance, it does happen.
Premiums for hole-in-one are based on 3 things: yardage, number of attempts, that's the golfers taking the shot, and the dollar value of the prize being given away. Premiums can start at about $150 for a $3,000 prize. Insurers like their odds.
The odds basically are 1 in 12,000 is what we've calculated. So people hit them, especially if you're doing the volume of business that we do. For us, it ends up happening about 1 in every 40 tournaments or so.
And how big are limits?
Typically, like for golf-related events, it's up to $1 million, but we have carriers that'll do coverage up to $3 million, and that's pretty much the max that we see.
But winning the prize is no slam dunk.
All the perfect brackets were busted after only 2 rounds of play. There were some upsets that destroyed, I think, 90% or so of people who entered the contest.
The more and more that people learn about it, I think the busier we end up being, because people get excited about it, and it's fun and different and not sort of your traditional insurance.
For AM Best TV, I'm Meg Green.